Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lavisha Darad. And it is the penultimate trading day and we have the earnings season which is getting started today. TCS, the IT bellwether, is expected to report its September quarter results, and that will set the tone for how the India Inc. fared during the quarter as well. But no big fireworks are expected, nothing major big surprises, but revenue growth that is seen to be improving quarter by quarter, and whether that momentum sustains and spills into the second half also, that is something that we'll be watching out for as well. But yes, ahead of the results, the GIFT Nifty trends are pointing out to a positive start for our own markets. Even the global setup looks quite positive, because if you look at the US markets, that ended higher overnight with S&P 500 notching 8th straight day of gains. Even if you look at the Nasdaq composite, that also touched about 23,000 mark for the first time ever. So all in all, the US markets were on a strong footing. Even the Asian Pacific markets, they were also largely higher today than this morning. We did see an important development that came in from the Asian markets, where the SoftBank has bought ABB's robotic division arm, and that's what popped the Japanese Nikkei 225 to about 1% as well. But yes, apart from the equities, gold continues to shine, but once again a record high, but it did see some profit booking at higher levels, and that is why it was, it came off the day's high as well. But yes, both the gold and silver, that continues to remain in the limelight as well. But how all of these cues will impact our own markets, we'll understand from our experts in a bit. So keep sharing all of your stock-related queries. We'll address them and we'll take them with our technical expert before the 9:30 a.m. But before that, let's quickly take a look at the top headlines. US markets cues to trade higher. The GIFT Nifty, meanwhile, is indicating a positive start for our own markets. Crude oil prices edge higher to one-week high amid a lack of progress of Ukraine peace deal and rising US oil consumption. Gold prices, meanwhile, sees an extension of its rally, but then sees profit booking from higher levels from early Asia trading. US President Donald Trump says that Israel and Hamas have agreed to terms of release of all hostages by Palestinian militant groups in Gaza, ensuring a major breakthrough to end their two-year war. Israel Prime Minister says that he would convene his government to approve the agreement, while Hamas says that the deal includes an Israeli withdrawal from the enclave and hostage prisoner exchange. India's largest IT services company, TCS, kicks off September quarter results today. The company is expected to report a modest revenue growth, while profitability might take a hit from the previous quarter. And UK Prime Minister is all set to meet Indian Prime Minister Narendra Modi today to deepen the commercial ties between the countries. UK Prime Minister's office has also told that he would use the recent trip to discuss the recently sealed deal and technology security initiative which was launched in 2024. All right, if you look at the last trading session, of course, it was a highly volatile session. There was higher highs and lower lows, but Nifty did end near its day's low. Nifty just failed to defend that 25,100 mark, but still was up above that 25,000 itself. What helped in yesterday's market that definitely stood out to be the Nifty IT index, because IT stocks helped cap any of the downside for the Nifty. All eyes will be on TCS second quarter results, because the stock has also been making some reversal, extending its rebound from the 52-week lows itself. But yes, no major surprises like I was mentioning, but all the eyes will be on the demand commentary from the IT bellwether, because that will shape the demand commentary and of course for the sector's outlook going into the second half of the fiscal year. But yes, apart from TCS, we have other companies like Tata Elxsi and GM Breweries, which will also be coming out with its September quarter results as well. Apart from the secondary markets, the IPO markets also continue to remain buzzing. Yesterday, we did see the Tata Capital IPO subscribing nearly 3x on the last day of its subscription numbers. Today we have the second day or third day, we have the last day of LG Electronics IPO subscription. Yesterday we did see 3.3 times a subscription of its IPO on the second day itself. Two new IPOs also will be opening today. We have Canara Robeco AMC, which will be opening its issue today. The price band is set at about 253 to 266 rupees per share. Rubicon Research, another IPO that will also be opening for subscription session today. The price band is set at 461 to 485 rupees per share. So we'll be watching out for the subscription numbers coming in from these two IPOs, which is opening for subscription today itself. But yes, apart from the secondary markets, let's take a look at the cash flow position, how they panned out yesterday. FIIs, they stood as buyers in the equity markets. They bought stocks which was worth about 600 crore rupees. DIIs, however, selling stocks which was worth about 243 crore rupees in the cash markets. Coming to the option queues data, Nifty put call ratio dropping to about 0.8 from 1 levels in the previous session, and RBL Bank, that stock continues to remain a part of the FNO ban as of now. But yes, coming to the pre-open rates, we're looking at a positive start for the markets once again today. Sensex is up about 100 points. Nifty is well above that 2550 mark. Whether or not this momentum sustains, and yesterday was just a temporary pull, setback for the markets, we'll understand from our technical expert of the show. Joining me is Chandan Thaparia of Motilal Oswal. Chandan, good morning. Nifty yesterday failed to defend that 2500 levels, but today the trends are looking like a positive start. What do you make the construct ahead of the earnings?
Good morning, Ravisa. Thanks for having me. So yesterday the market negated this formation of higher highs, higher lows on the daily chart, witnessed a corrective move from 25,200 to 25,000. But immediate structure is positive to range bound, or I can say range bound. We have noticed that from last almost 3 to 4 months, the index has been moving in between 24,400 to 25,400 marks, and in between hurdles are visible at 25,200 level. So it failed to surpass that and witness corrective move, but I believe buy on decline could continue. As of now, 24,800 is major support with hurdle at 25,200. So one can utilize this decline as a buying opportunity with buy on decline stance. So I believe with support of 24,800, look for an upside recovery towards 25,200 to 20 marks.
Okay, all right. Let's also discuss about Bank Nifty index because yesterday we did see some profit booking after 6-day rally that the index has seen. What is the next level that you want to underline here, Chandan, for Bank Nifty index?
So Bank Nifty also negated its formation of higher highs, higher lows on the daily chart, fell to hold beyond 56,300, corrected towards 55,800 marks. But good part is it closed above 56,000 levels. If I look at the daily chart, the Bank Nifty is comparatively outperforming, and recently it formed a positive price pattern, that is inverse head and shoulder pattern. So as of now, till it holds above 55,555, the reversal pattern is intact, which might see the rally of 1,500 points. But for that, it needs to hold 55,555. So till that level is respected, we are expecting Bank Nifty to again head towards 56,500 and then next move towards 57,500 kind of level.
Okay, let's talk about IT stocks now because that is the major talking point of the street today. TCS will be reporting its second quarter results. According to Moneycontrol's poll, revenue is expected to grow about 0.2 to 1% on a Q-on-Q basis, while operating margins are expected to remain flat at about 24.5% in the second quarter as well. But yes, Chandan, the stock has been seeing reversal from the 52-week lows. What is the next for TCS and of course for the entire IT sector?
So Nifty IT has been finding buying interest from last 3 to 4 days. In fact, recovered by around 4% on weekly basis. We are witnessing formation of high rise, high lows in the Nifty IT index, which indicates some more recovery could be seen. Talking about TCS, it formed the bottom near 2865 marks. In fact, earlier also in the 2022, the same kind of level respected in the market at the time of corrective move. So I believe such kind of support could hold the market at lower levels. We have seen the call writing, put writing both at 3,000 strike. And as per the data setup, we are expecting the broader range between 2950 to 3100 kind of level. So some recovery cannot be ruled out. One can go with bull call spread by buying 3000 call, sell 3120 call. So follow the support of 2950 for a recovery towards 3100, 3120.
Okay, all right. Let's also talk about consumer durables because that has been doing well for the past 5 trading sessions as well. Chandan, what are you liking from this space? Because this particular basket has been seeing traction ever since the GST reforms have been announced. And right now in the past 5 days also, it's got a renewed buying interest.
Like when you look at the consumer durables, I believe selective counters are bottoming out, but momentum is missing. When I talk about Voltas, multiple supports are visible near 1320 levels, but again, follow up is missing. In fact, the bottoms are visible, but hurdles needs to surpass. So I believe as of now, the trading range for Voltas is likely to be in between 1330 to 1400. Looking at Havels, I believe short-term bottoms are taking place after the lower top, lower bottom formations. So supports are near 1460 for a recovery towards 1550. So mixed set of cues. Most of these stocks have corrected. So that's why we are looking for some support-based buying.
Okay, support-based buying could be visible for consumer durables counters. Let's also talk about Scott's Kubota because the company did come out yesterday and said that they plan to invest about 2,000 crore rupees by 2031 to expand its manufacturing and research facilities in Haryana as well. But yes, from a stock perspective, Chandan, the stock has been consolidating at higher levels. 3,500, 3,600, that is where the stock has been oscillating. What can we expect next? Is the sideways momentum expected to continue?
So this stock earlier used to outperform, but now of late it got stuck in a range. If I look at the price history of last 6 years, the stock really dwelled from 500 to 4,400 levels and now hovering near 36, 3,800 marks. We have noticed that from almost last 10, 12 weeks, it has been consolidating with multiple hurdle at 3,800, but at the same time 3,400 is acting as a major support. So I believe we need to play the range as of now. 3,400 to 3,800 is going to be the trading band as of now for the stock.
Okay, all right. That's the view coming in for Scott's Kubota. Let's take in your view on InfoEdge as well, because that company also came out for its business update for the second quarter, where they have said that the standalone billings during the September quarter was up from the previous year as well. And for the first half, the standalone billings stood at about 1,300 crore rupees compared to 1,200 crore rupees from the year ago period as well. The stock has been seeing good momentum in the past 1 month, trying to play a catch up after its underperformance. Chandan, what are we expecting the next levels to be?
So, Nokri or Infoes has been moving in a range where declines are being poured, but follow-up is missing. In fact, if I look at the price behavior of last 50 days, twice it fell to surpass 1430 marks, witness consolidative move, but at the same time, 1300 is acting as a key support. So, 1300 to 1450 is going to be the probable trading range for the counter. We have to play this range as of now. So, some sort of range bound bias is visible in Infoes or Nokri.
Okay, all right. Just less than 10 seconds to go before the open, but let's get in your view on Prestige Estates also, because yesterday we did see a second quarter update, sales rising by about 50% year on year, collections rising by about 55%, but however, the stock has been consolidating at higher levels. What can we expect next for Prestige Estates, Chandan?
No, as of now, the structure is weak. In fact, the stock has been making lower top, lower bottom. In fact, it witnessed a recovery but failed to surpass or failed to hold beyond 1555 and turned lower. So 1500 is immediate support. If that is broken, then I believe 4 to 5% kind of corrective move cannot be ruled out. So as of now, it looks weak on the daily and the weekly chart.
Okay, all right. It looks weak on the daily weekly charts. Let's take the first trades coming on your screen. The Sensex and Nifty, both of them have opened in the positive territory. It's a green screen for now, but however, it's very quiet start for the markets, because if you look at Sensex up about 95 points, Nifty has also opened above that 2550 mark as of now. If you look at some of the other Bank Nifty index, that has opened flat with a positive negative bias. So financial stocks once again taking a setback after the 6-day surge we saw, and yesterday some profit booking was seen. So second day of losses coming in for the Bank Nifty index. We'll watch out how the rates settle out later in the day. But yes, one of the, let's look at a Nifty IT index that continues to remain attractive and seeing good traction. 0.4% gains coming in for their Nifty IT index doing well. Nifty Autos has been also been holding quite steadfast. 0.4% gain coming in for Nifty Auto index as well. Nifty Pharma, however, that has been the sectoral outlier. 1% gains coming in for the pharma company, pharma stocks. And if you look at Nifty Realty, like we were discussing about Prestige Estates coming out with its second quarter update, yesterday we did see Keystone Realtors also coming out with its good business update, and as a result we can see some momentum building up in the realty counters as well. 1% uptick coming in for the realty index as well. However, what is not doing well, that is your banking stocks. That remains the laggard, and today they are seeing a little bit of a profit booking once again in today's trading session. Let's take a look at some of the top gainers and losers. However, pharma stocks, they continue to remain the spotlight and hogging the limelight today. Because if you look at Dr. Reddy's, Cipla, they are some of the top gainers on the Nifty 50. TCS also seems to be doing well ahead of its Q1 Q2 results. Nearly a percent gains coming in for there as well. 0.7% gain coming in there for TCS. Tata Steel, Jio Financial, some of the other gainers on the Nifty 50. And on the losing end, Tata Motors once again sliding on the back of its weak JLR wholesales data that we saw yesterday, and nearly 0.5% cut coming in there for Tata Motors as well. NTPC seeing a cut of about 0.5%. Shriram Finance also seeing a cut of about 0.4%. Titan continues to see some profit booking. 0.4% cut coming in for there. After yesterday, it was one of the top Nifty gainers on the back of its strong Q2 business update that we saw. Today, it's seeing some profit booking. 0.4% cut coming in there for Titan. Max Healthcare also sees a slide of nearly 0.3% cut. But yes, coming back to Tata Motors, once again the top Nifty loser. Chandan, what can we expect for the counter? I mean, it's the the trouble seems to be mounting up for the counter, and once again, it is under the investors' radar, and the investment negative sentiment has been playing out for Tata Motors.
From last 4 days, it has seen a corrective move from 740 to 674. It has nature of being volatile, and that is the behavior we have noticed in last many months. So I think such kind of volatile swings would be there in the stock. As of now, 650 is the support, 700 is a hurdle. So 650 to 700 is probable trading range. We need to closely watch for any kind of decisive momentum in the counter.
Okay, all right. Let's take another stock in focus. That is your Lupin, because the company plans to establish a pharma facility in Florida, and the project involves an investment of about $250 million over the next 5 years as well. But yes, so far this year the stock has been underperformed. Chandan, what can we expect the next moves to be for Lupin?
Actually, the Lupin got stuck in a range. In fact, the counter is down by around 16-17% on YTD basis, but got stuck in a range. In fact, from last 4 to 5 months, it has been hovering near 1950, 2000 kind of zone multiple times. In fact, on the daily and the weekly chart, we are witnessing buying interest at lower levels, but follow-up is totally missing. So the counter is likely to be in a broader range. 1875 or 1850 is multiple support on the lower side. 2050 is multiple hurdle. So some sort of range bound bias or positive range bound bias can be seen in such kind of name.
Today, however, the stock has been doing well, holding up in the green, and majority of the pharma companies also seem to be doing well in this market. Let's take another stock in focus. That is your Senco Gold. The stock seems not to be doing well, but yesterday we did see the company coming out with its September quarter update, where the revenue has risen by about 6.5% on a year-on-year basis. Total revenue has been up by about 18% on a year-on-year basis in the first half, and the company has opened about 5 new showrooms during this September quarter as well. But yes, the stock continues to see no major moves, remains in the lower end. Chandan, what can we expect? The pressure expected to continue, or is it going to remain at a consolidation zone at the lower band as well?
Senco Gold looks weak as of now. The structure is clearly lower top, lower bottom on the daily chart. It has breached the important support of 335, holding below the same. So I believe till it remains below 340, sell-on bounce could be seen, or counter as downside potential target of around 315, 310.
Okay, all right. Let's talk about some viewer queries that has been dropping on our live feed. First query coming in from Nana Prakasham. He's asking the view for Canara Bank on how the counter looks like. Yesterday, we did see that the company saw good traction, Chandan, on the back of UBS note. But yes, what can we expect the next moves? The stock has been an outperformer in the past 1 month.
Yes, overall, we have positive view on this counter. In fact, the stock has been continuously making higher top, higher bottom on the weekly chart, really do well from last almost 6 weeks, from 104 to 128. However, on the last trading session, it formed a bearish candle, but major trend is positive, so buy on decline could continue. So till it remains above 123, one can use any small decline for buying opportunity, and the counter has potential to head towards 132 marks.
Okay, all right. That's the view coming in for Canara Bank. Let's take another viewer query then. We have Satya, who's been asking the view on Praj Industries or Kirloskar Oil for the medium-term horizon. What does the charts indicate for both of these counters, Chandan? Because if you look at Praj, the stock has been a clear underperformer. However, Kirloskar Oil Engines, from a year-to-date perspective, it has been an underperformer, but the stock is trying to play a catch-up in the past 1 month.
So Praj industry is weak. The stock has seen a corrective move of more than
Mm.
57% in this year. In fact, wiped out the entire recovery of last 2 3 years. In the year 2022, it really did well from 290 to almost 855. But in this year, it corrected from 875 to now below 350 marks. So structure looks weak. Next major meaningful support will be near 335 levels. So as of now, it looks weak. Avoid the position in the counter. Those who got stuck, try to use any small bounce to exit the position as of now.
Okay, all right. Let's take another viewer query then. We have Vijay who's been asking the view for Samvardhana Motherson on how the counter looks like on the charts. Yesterday we did see some pressure which came in for the counter as well after the Chinese after BMW said that they are seeing some profitability issues in the Chinese markets as well. Chandan, what can we expect for the counter? Today the stock, however, seems to be holding up well flat with 0.5% gains.
So we have seen a corrective move in last almost 2 3 weeks, but multiple supports are visible at 99 levels. So I believe a recent corrective move might hold with multiple support zone. We have seen a correction from 112 to 101 kind of level, but 99 could act as a support. So with support of 99, one can now play for reversal towards 106 levels.
Mm. Okay, all right. That's the view coming in for Samvardhana Motherson. Let's take another viewer query. We have DC who's been asking, Debuke who has been asking the view on RVNL for a fresh entry as well. What would you suggest for a fresh entry? How does the counter looks good? Because the stock has been off nearly 15% from its a year high as well.
So RVNL is comparatively weak, down by around 19% YTD basis. It has got stuck in a range. In fact, this theme is not working well. However, momentum is fizzling out or buying interest is seen at lower levels, but momentum is missing. So we have to play the broader trading range. As of now, 330 is the support. Upside hurdle is at 365. So we have to play the range between 330 to 365.
Okay, all right. That's the view coming in for RVNL. He's been also asking the view on Lodha for a fresh entry, whether it is advisable or not. Of course, this counter has also seen about 20% correction from its year high levels as well, Chandan. What would you suggest?
So as of now, the stock has been making lower top, lower bottom on the monthly chart. In fact, corrective move is visible from last 4.5, 5 months. It has seen a correction from 1530 to now below 1100 marks. However, in last 2 days, some recovery is clearly visible, but structure is like negative. But yes, if someone is looking for bounce, use the support of 1100 for a recovery towards 1200, 1210.
Okay, all right. Use the recovery to about 1200 to 1210. That's the view coming in for Lodha developers. Let's take another viewer query on that note. We have Shweta who's been asking the view on Tata Power because she's been holding at the current market price from a long time, but she's asking, but she's saying that the stock has not been moving much, and she's saying that whether she should exit and she shift to PFC and hold that particular stock. What would you suggest, Chandan? What should she do at this point of time?
So, talking about Tata Power, the stock has got stuck in a range. In fact, in last 3 days, we have seen a correction from 397 to 380. Multiple supports are visible near 375. Hurdles are visible at 400. So, 375 to 400 is the trading band for the counter, but momentum is missing. If someone is looking for REC, I think same sort of bias. 365 is the support, 385 is the hurdle. So, I believe both are the same kind of setup or mixed kind of cues in both the name, whether you talk about Tata Power or REC. So if you are looking for short term, then you need to exit. But yeah, slightly long term view is positive, so can stay for this consolidation phase to hope for the next leg of rally in the counter.
Okay, hold the consolidation phase for the next rally of the counter. That's a view coming in for Tata Power. Let's take another viewer query. We have Naveen who's been asking the view on Titan and whether it is a right time to enter the stock at this current price. What would you suggest, Chandan? Is it a correct entry point? Yesterday we did see good run up. Today we are seeing a little bit of a profit booking on the back of its good September quarter business update.
Yeah, so gold is hitting to the new highs every day. Records on
Mm.
records are visible, and even the precious metal or the white metal, silver is also heading upwards. So we have seen a strong momentum in both the commodities or the precious metal. So because of that, the Titan was laggards earlier, but in last 7 8 days we have seen a decent recovery from 3300 to 3580 kind of level. Today is dull, but yes, 3480 is major support. So buy on decline with support of 3484, target of 3700 can be seen here.
All right, 3,700, that's the target coming in for Titan as well. Let's take another viewer query on that note. We have Rashmi who's been asking the view on IDFC First Bank, whether to hold the position or not on the company. What would you suggest, Chandan? Because the stock has been consolidating at higher levels, nearly about 70 to 72 odd mark from a stock perspective. Today also the stock seems to be doing well, 0.5% gains coming in for IDFC First Bank.
Yeah, so comparatively selective mid small banking counter are doing well, and IDFC has positive price pattern. In fact, multiple hurdles are visible at 73.5 or 74. But I believe that level could be surpassed soon. So with support of 70, one can look for an upside target to a 74 and 76.
Okay. All right, that's the view coming in for IDFC First Bank. Let's take another viewer query then. We have Shweta who's been asking the view on Suzlon because her buying price has been about 59 rupees per share. Today the stock has been trading at about 53 rupees, 0.5% gains coming in there. But of course, she's seeing a bit of a loss at this point of time. And the past 1 month also, the stock has been in a negative trajectory. It's been seeing a decline of about 6% itself. Chandan, what can she expect at this point of time? 59 is a buying price.
So the structure of the counter is weak. It has been making lower top, lower bottom for from in fact 19-20 weeks, corrected from 74 to 53, and I believe 50 could provide as a psychological support zone. So as of now, I don't see any sign of recovery, but 50 might provide some support. So keep this level in mind.
Okay, that's the view coming in for Suzlon Energy. Let's take another viewer query. We have Panu Anil who's been asking the view on Parag Milk Foods. Today the stock is seeing a cut of about 2% itself, but in the past 1 month, the stock has delivered about 8% returns. And from a year-to-date perspective, the stock has been quite stellar, 50% returns coming in for Parag Milk Foods. The structure remains quite positive. But Chandan, now what can we expect the next levels to be? Right now, the stock is trading at about 282 rupees.
So it's in a positive territory, but witnessed some corrective move in last one day. Yeah, recently witnessed a corrective move. We have seen a recovery from 257 to almost 294. Today it fell to hold at higher levels, but major trend is positive. I believe till it holds about 275, one can hold the long position for an upside target towards 300. We need to keep in mind that major trend of the counter is positive, and it has recently taken support. It is 50-day exponential moving average. So one can hold the position even after the negative stance of the stock. Slow and steady with support of 275, it can head towards 300.
Okay, all right. Good target coming in. That is your 300 for Parag Milk Foods as well. So watch out for that counter. Let's take another viewer query. We have Ratna Kumar Solomon who's been asking the view on Adani Green Energy because he's been holding about 50 shares in the particular counter. Adani Green, it did see a good up move, 1100 levels. That is where it had touched, but right now it's come off those levels at this point of time. Chandan, what would you suggest the next moves to be for Adani Green?
So again, it got stuck in a range. 1010 is the support, 1090 is hurdle. So we have to play the range between 1010 to 1090.
Okay, all right. Let's take one stock in focus then. We'll be talking about Senco. We'll be taking another viewer query then. We'll be talking about Nalco. Alex has been asking the view on how Nalco is looking like from a short-term perspective. Of course, the entire metal pack has been seeing good buying interest. And of course, today also the Nifty Metal Index has been holding up in the green. Nearly a percent gains coming in there. Today also Nalco is seeing about 2% gains. And in the past 1 month, the stock has already gained about by 10% itself. Chandan, what would you expect the next moves to be for Nalco and of course the entire metal pack because that has been buzzing in trade?
Yeah, so it looks good, and I believe with support of 224, look for an upside target towards 238. So positive view on the counter. And in fact, I believe the entire metal can do well, and one should buy Nalco. If someone is holding, can keep the trailing stop loss to hold the position as well.
Good moves coming in for Nalco, and of course the metal index has been seeing good traction in the past couple of sessions as well. Let's take another viewer query in that note. We have Amardeep Shah who's been asking the view on Vishal Mega Mart. Today the stock is down, nearly 0.2% cut coming in for the counter. But yes, the stock has seen a good run up in the past couple of months as well. Chandan, what would your next target be on Vishal Mega Mart and how do you stand on the counter?
So it got stuck in a range. Follow-up is totally missing right now, trading near 150, and in fact the same level is visible from last 37 trading days. So range bound bias as of now not getting any sense. But yes, one can look at the trading range between 145 to 155.
Okay, all right. That's the view coming in for Vishal Mega Mart. Stuck in a range at this point of time. Nearly 0.2% decline coming in for the counter. Let's take another viewer query then. On that note, we have Nitin Shaji has been asking the view on Aster DM on how the stock looks like. Definitely in the past 5 days, we have seen that the stock has gained good momentum, 11% gains coming in for the counter itself. But yes, can this momentum sustain going ahead into the short term period as well, Chandan?
Yeah, one can hold the long position. Major trend of the counter is positive with support of 684. Aster DM has potential to lead to us 730. So one can continue to ride the positive momentum of the counter.
Okay, all right. One can ride the positive momentum on the counter as well. Let's take another viewer query. We have Karan Kamath who's been asking the view on Vartech Vabag on how the counter looks like. In the past 1 month, the stock has been seeing some slide. And of course, from the August highs, also the stock has been stuck in a range bound momentum, 13% downtake coming in for the counter. Chandan, what can we expect the next moves to be? Because the stock has been oscillating, the stock has reached almost near the lows about 1400 rupees.
Mixed set of cues. In fact, the medium term structure for Wabag is negative. It has been making a lower top, lower bottom. However, in last 2 days, some support based buying is visible, but yes, upside seems to be kept. Follow the level of 1400 as a support for 1475 as a recovery. So small bounce can be seen before it gets the momentum fizzle out.
All right, that's the view coming in for the company as well. Vartech Vabag. Today the stock is seeing good momentum, nearly a percent gains coming in for the counter. All right, just one last question before we let you go, Chandan. What are your topics at this hour? We are on the onset of the earnings season as well, but what are you finding interesting in the markets?
So first preferred idea will be Nalco. Selective metal companies are doing well. So one can buy Nalco with support of 225. Look for an upside target towards 237. Apart from that, selective new age business can do well. One can focus on counter like delivery with support of 463. Look for an upside target towards 490. So metal and new age business could be in focus, I believe.
Okay, all right. Metal stocks are quite bullish on at this point of time. All right. With that thought, we have to let you go, Chandan. But thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets of where we stand. Nifty has been holding flat in the green, but still above that 2550 mark. That is what we have been defending in the early minutes of the day as well. If you look at Sensex is also holding up well in the green. You can see about 100 points uptake coming in for the Sensex as well. Both the benchmark indices holding well in the green. Even the broader end of the markets, mixed cues coming in from there because small caps continues to slide, flat to negative bias, and mid caps are holding up well with about 0.2% gain. Sectorally, it has been the day for the metal counters, and of course the pharma counters also seem to be doing well. Both of these indices are holding up well in the green and with a percent gains. On the other hand, if you look at Nifty IT index ahead of the TCS Q2 results, it's seeing some some sluggish reaction. However, flat in the green at this point of time. Nifty autos have succumbed to some selling pressure, nearly profit booking, and of course you can see Nifty auto index has slipped it into the negative territory. On the other hand, FMCG and media stocks continue to remain under pressure, and Nifty Realty Index also has come off from the day's high levels. But let's quickly move on to our next guest of the show. But before we move on, let me also introduce you to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls and investment ideas from SEBI-registered experts, pre-identified chart patterns, and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. So you can download the Moneycontrol app today and subscribe to Super Pro today itself. All right, with that, let's quickly move on to our next guest of the show. We have Sandeep Bagla, CEO of Trust Mutual Fund, joining us. Sandeep, good morning. How does the market construct look like? We are expected to see a single-digit earnings growth, but valuation-wise, do you believe that we are at comfortable valuations at the current juncture? Sandeep, I think your audio is mute.
Oh, sorry. Thank you. Thank you,
Yes.
Lavisha. Good morning. Thank you for having me on the show. I think the valuation wise, markets have been at the upper end of the historical standards, and basically the idea is that earning growth will come back with a bang. That is what the market seems to be suggesting. There is a lot of money flow coming in into the equity markets from domestic side. FPIs have been selling and moving on to more exciting markets, which are far cheaper and have some positive triggers. But you know, it seems to me, looking at the market, that it is going to be a little more sideways for some more time to come. I think it could be a very stock-specific market, so you might see stock-specific large moves on both sides, depending on the results. And of course, there's a big uncertainty on the trade front with US, and I think markets are expecting that at some point of time we will have a more reasonable resolution to the entire issue with the tariffs likely to be in the range of 20-25% in line with our neighbors and similar countries. So that is also in the works. So there are a few positive factors, like, for example, the GST cut should spur domestic growth, domestic consumption demand. The easing of lending norms for banks should lead to a pickup in credit offtake, and banks should, uh, ease the shoestrings, and there should be more borrowing. But there are some ifs and buts. Earnings should pick up, but it is difficult market right now. So having some tailwinds and some headwinds, I think markets are caught in a range at the aggregate index level. So don't expect markets to really give breakout returns or breakdown in the immediate future.
Okay, okay. But if you look at the industry that seems to be going up for the September quarter. That was up about 7 to 8% in single digits, but still relative growth compared to what we have seen in the previous quarter as well. What do you make of this sentiment? You're saying that we not no big breakout returns should be expected for at least the medium term, but for the long term horizon, what are we expecting going ahead?
Sorry, which sector did you mention?
No, in general, industry I was talking
Ah,
about. Yeah, that they have seen a
yeah.
good
So
growth in the September quarter.
no, I see. In the long term, I think we will do quite well. We will continue to grow at a relatively higher speed, at higher pace compared to other large economies. And I think the demographics and the general conditions are quite conducive for long-term growth. I think the medium term is also not that bad. I think it's a short term where we are sort of going through a time sideways correction, and there are no major triggers at the aggregate level on the index. I think those are the challenges. But I think the long-term investor should stay steadfast and keep investing, periodically long-term surpluses. And that is the way to invest in equity markets. I mean, equity markets are not likely to give you very predictable returns and very consistent returns. But over a long period of time, I think the returns are slightly higher than the nominal GDP growth. So I think we are in a decent space right now, and probably we will get some more better opportunities to invest in the coming few months.
Okay, okay. Sandeep, let's all talk about the talking point of today. That is your TCS results. That will set the tone for the entire IT sector also. But no major big surprises are expected from this quarter. But what are the major factors that you'll be watching out for that will set the tone for the second half of fiscal year?
See, that while we do not want to comment on individual companies, for me personally, I think the IT sector has been somewhat of a disappointment in the sense that uh, you know we are missing the big bus, so to say, which is AI-led investing, or in the emerging areas. And we have had companies who are returning cash at a time when the globally money is moving to the more risky businesses, which could lead to better payoffs. So this is slightly disappointing. So I think IT has not lived up to the mark and true potential that could have been. So I think IT will not really set the pace or set the tone for the markets going forward.
Okay. IT is something that everyone should be conservative about. But let's talk about small cap space because they have seen earnings downgrades in the past 2 quarters itself, while mid caps have remained resilient. How would you suggest investors should approach small caps going ahead? Because that is where the majority of the investors' interest has been in terms of quick money. What would you suggest small caps going ahead from here on in terms of earnings growth perspective?
Quick money is, it's a everybody's a lot of some people aspire for making quick money, but it is, as they say, that overnight success has multiple years of efforts behind it. So I don't think equity market should be treated as a source for generating quick money. One should be able to beat inflation comfortably, earn a real interest rate over inflation, and also grow the capital over a long period of time. I think that should be the lookout from the equity markets. So I think small caps is a very large set of companies. More than 4,500 companies qualify as small caps because we have capped our definition of large cap companies to only 100 companies and mid cap companies to only 150 companies. So small cap actually is a representation of a very large set of companies. And lot of new companies are getting listed. I think more than 300 companies have got listed in last trailing 1 year. And a lot of sectors are getting larger as the economy grows in different spheres and directions. So it is not reasonable to classify small caps as one single monolithic whole. It's a very sector specific and stock specific market. I think small caps will continue to do well. The earnings have been revised downwards at an aggregate level because the economy has somewhat slowed, and also the earning growth expectations were extremely high in the small cap space. So compared to large cap growth expected for the next 2 years, the small cap and mid caps are expected to grow almost at the double the pace, which explains partly the reason for high price earnings or high valuations. So I think small caps as a category, as an index, might see downward revisions, but there will be companies which will be doing quite well. So we have a small cap fund where we take about 50, 60 companies, and we are finding exciting opportunities within the small cap sector, quite a lot of them actually.
Okay, all right. Sandeep, you mentioned that a lot of exciting opportunities you're seeing at this particular point of time in the markets. We are expecting some good growth coming in from second half of the fiscal year. So, where can investors bet on in terms of sectorally to find that good earnings growth visibility?
See, I would say that investors should actually go to professional fund managers and invest in mutual fund schemes because the fund managers spend all their time doing this day in, day out and are able to change their portfolio allocations in expectations of the changing realities far better. They are far better equipped than individual investors. But I think in terms of industrials, I think there is a lot of growth possibilities in terms of physical asset creation. In terms of domestic consumption, there could be growth because of the stimulus provided by the government. So there would be individual opportunities in quite a few sectors where value migration is happening and people are moving towards more premiumization. It could be in so many other sectors like real estate or but there are global winds which are changing. I have seen recently that the dollar has started strengthening a bit. So I think that could lead to some profit taking in non-dollar assets across the globe. So I think we are in a situation right now where there are too many uncertainties to really bet on individual stocks from a retail level. So I would really recommend that people should stay invested in small cap funds with a longer term view. With a the one way to beat the volatility is to increase your investment horizon. So I think small caps will provide you opportunities at all points of time, but it's a specialist market. It is not to be treated trivially because the downside can be also quite large.
Okay. But what are you making in terms of earnings growth? I mean, yesterday we did see World Bank downgrading the outlook for FY26, FY27, despite us being optimistic of earnings growth to recover from the second half. So, what do you make of this? Do you believe that the tariffs could bring down Indian economy, slow down, and would that actually mean something going ahead?
It's a very difficult call. I think we'll have to wait for some more data to emerge because tariffs are a true headwind. There's also the issue of slowdown in the economy, which is slightly cyclical in nature. But at the same time, the government has taken multiple steps to boost the demand from the consumer side. One thing is there that one cannot rely on government to carry on more government expenditure or capital expenditure. And I think there's one more concern which I think has been sort of underplayed globally, which is inflation. Global bond yields are going up, gold is going up, Bitcoin is going up. So it all points towards the underlying fear factor, which is inflation. And global inflation is not looking to come down. And at the same time, globally central bankers are reducing interest rates while they are also not expanding their balance sheet, but they are reducing interest rates at a time when inflation is running higher than their target rates, which I think is slightly dangerous from financial markets perspective. So really a time to wait and watch rather than take aggressive action at this point.
Okay. Sandeep, amidst all of this uncertainties, we have seen that gold OM has risen to about $10 billion. It has crossed that particular $10 billion mark as well. What do you make of this sentiment? I mean, amidst all of this uncertainties, is this the particular safe haven pocket that investors should bet on until a more clear earnings visibility has come up for the markets and equities become once again attractive from that particular perspective?
Anything which has moved up 30, 40, 50% in the past few quarters is definitely not cannot be construed as safe haven because it is amenable to sharp corrections as well. On a structural basis, I think gold is indicative of the fact that it is a hedge against the inflationary expectations. I think that one should assign some weight that inflation will go up in the coming quarters, and that way the allocation to gold can be increased a bit, but on a tactical basis. So I think gold is a good bet. I think against inflation and as a portfolio hedge. Silver is it's a distant cousin who's also running behind gold, but I think one should be little cautious and should not really sell the house and bet on gold at this point of time.
Sell the house and not to bet on the gold at this point of time, all right? With that thought, we have to let you go, Sandeep. But thank you so much for your time, and we hope that we connect with you soon.
Thank you, Navisha. Thank you.
All right, let's take a quick check of the markets of where we stand right now. Of course, Nifty is still holding on to the green, but it has come off its day's high level above that 2550 mark, nearly flat in the trade at this point of time. If you look at the broad end of the markets, they seem to be outperforming. Mid caps definitely one of the top outperformers with about nearly 0.3% gain coming in there. IT and pharma stocks, both of them continue to remain resilient at this point of time. However, if you look at Nifty IT index, nearly 0.3% gain, and metal and pharma stocks, that seems to be hogging the limelight with about 1% gains each. However, financial stocks, they continue to remain under pressure for the second consecutive day. FMCG also seeing a bit of a stress. Private bank and PSU lenders, both of them are seeing a cut of about nearly flat to a negative bias. So all in all, it's a mixed trading session. It's a quiet start for the markets, but whether or not we improve from here on is something that we'll be watching out in the second half of the trading session. But yes, let me once again introduce you to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI-registered experts, pre-identified chart patterns, and AI-powered stock alerts on your WhatsApp to help you trade and invest with confidence. So you can download the Moneycontrol app and subscribe to Super Pro today itself. All right. right, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 for closing, and we will be discussing about how the market is developed with our experts and also discuss the stocks that did grab the headline. Until then, signing off, do stay tuned to moneycontrol.com.